Let's talk a little bit more, Sean, about working against the U.S. dollar. 93.111 is what DXY is at right now, heavily euro weighted. When you take a look at dollar versus dollar China, rather, and if we have time, might be instructed to take a look at the yield differential between U.S. 10-year paper, the benchmark, and also the Chinese 10-year. A guest earlier, just a couple seconds ago, in fact, was noticing that the spread has blown out to levels, probably historic highs, north of 250 basis points. That's got to mean further dollar weakness, Noah, and obviously the flip side is further RMB strength.
Yeah, I think so. That's really been the case for a while, that it's had that yield advantage. I mean, we talk about the extreme policy responses around the world to the pandemic, and slashing rates, zero rates around the world, record low rates and so on. But obviously that wasn't China's first preference. They're always concerned about anything that would fuel a sharp move in the currency, particularly capital outflows, given that it all kicked off in China in January. So keeping the currency sort of supported on the yield side is very, very supportive. Obviously, more recently we've had the inflows from joining bond indexes around the world, but also just the closure of borders, virtual shutdown of vast majority of international travel has meant that China's services deficit has shrunk considerably. So a lot of money is being kept in China that would normally be spent on tourism and business trips around the world. So that's been another supportive factor for the renminbi. So I think that for the time, until further notice, it'll be a case of limiting its appreciation rather than being concerned about any softness.
Shepard Smith here. Thanks for watching CNBC on YouTube.